Hi. Every single startup business plan that I've ever seen calculates their expected growth over, say, a 10-year period like this. The good ones put in a sensitivity analysis. However, if you correctly account for the sensitivity by putting into your business plan the actual dynamics of real-life business processes rather than the oversimplification captured in the red line, you see something completely different that performs significantly worse than typical business plans will predict. What you see here is what you should expect for this specific business. The yellow line shows that you should expect this business to go bankrupt within 10 years and you will lose all of your investment, unlike the traditional approach to business planning, which predicts that it will double in size every year. The moral of the story is, first of all, use the correct dynamics in your investment decisions. And secondly, work at the level of your portfolio as a whole to recapture some of the losses that real life business dynamics bring in versus the typical business plan prediction. If you want to know more, check out my book, Rebuild the Economy, Leadership and You, and sign up for our workshops for investors.